Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading, and today we're going to be talking about the beginning of January, some of the best trade setups right out of the playbook. And just to go back and reiterate, we talked about the importance of the inside days in previous videos, and we talked about also trading around major holidays, key trigger days in terms of what to look for potential best trade setups and explosive trade opportunities. Now, we had several inside day and narrow range days right heading into Christmas and post New Year's, and we can just scroll through and look at these. So we had a narrow range day on the Friday just before Christmas on the Canadian dollar. We had an inside day, and we've talked about the two types of best trade setups that can come out of those. We can get a reversal, or we can get a trend continuation for an explosive move in line with an existing strong market. And again, I talked about Toby Crable talks a lot about using this to identify potential explosive trade opportunities on opening range breaks, the inside and narrow range days. But heading into the new year, the new month, we had a market that, if we come back to our original premise, we have our day count, and the day count starts when we have a market that breaks out and fails. So we have a market that breaks a weekly high or low, and that breakout fails. And that failed breakout is where we now can identify a potential best trade setup, if indeed it sets up. So that part one is a setup, meaning a trigger day, and then the setup itself has to take place on the day in question. So we had a breakout that failed, and then another breakout that failed on the Canadian dollar heading into the end of the week, the end of the year, and the end of the month. And coming into our new week on Monday, New Year's Day holiday, New Year's was on the Sunday, and so most markets were closed because the Monday then became the holiday that people celebrated. And we talked about this in the last two videos I just showed at the beginning around major holidays: July 4th, Thanksgiving, Christmas, Labor Day, mostly North American major holidays in the U.S., because when the U.S. isn't trading or there's a major holiday, typically most other markets will be affected in the U.S. session. Not always. There can be some other best trade setups, but the narrow range or inside bar day is what can be the precursor to a large possible move. And so we'll just run through and take a look at the different scenarios that played out. We had the Canadian dollar broke out in Asia, made a high and a low. So again, our opening range that's set on the day itself, on our Monday, we talked about opening range. So for those traders who have the playbook, go back and read about Monday sets the opening range for the week. But if we're looking for a 3-session setup, Asia will set the range for the day. And we have the US session making a high and the Asian session extending the range. That market then put a high in place and proceeded to come down and put a low in place. There's our high and our low now. We've broken the inside day. We have other time frame traders triggered into the market. They've also triggered the high of last week. Just zoom that across. And then, lo and behold, in our Europe-London window, the market breaks out and engulfs at the London Open. So coming back to understanding the three things that markets do: they break out, they pull back, and they trend. They break out, they pull back, fail, and reverse. And if they reverse, most likely we know there will be stops at the most recent swing high. But if it's on a longer time frame, at the other extreme potentially, if we have 4-hour, 1-hour traders now triggered into the market. So when it's triggered on the outside extremes, we have pretty much all time frames involved. We have a low of the day low of the session breakout trade now that engulfs and on a smaller time frame. Traders talked about the 5 minute. You can use the 1 minute. Again, we've got criteria that we use to get into certain trades, but this is an example of the breakout trader. The initial first mouse is triggered into the market. That breakout fails. They put a low in place. That market then breaks out in the next session window for the explosive vertical move in the London session. The Swiss franc, another example of fantastic inside day. We can go back, but we have a high of the week heading into the new year from last Friday, Monday. That was the breakout that failed, the false break that gave us our day one on the Friday, day 2 on our Monday, day 3 on Tuesday. So we had, coming back to our breakout traders, day 1 breakouts. I know people are going to get confused. It's really simple. These are all different setups. Day 2 breakouts, day 3 breakout traders in the market, and our close is inside of that breakout. On the 3rd breakout, they go down one more time before closing as a first green day. First green day on Friday. First green day. We'll put that in there. Day 3 breakouts, reversal. We get a first green day on Friday. And I mentioned this in the playbook. If we don't get a move on day 1, but the market still holds its profile for the first green day setup, and obviously yesterday, Monday being a holiday, we potentially may have a first green day trade for an explosive parabolic vertical move for the Swiss franc, which occurred in the London session. And this is an example of, again, a market that establishes a high and a low to give us our opening range. And we'll just break down. And this is actually an example of where the breakout is the actual trade. So most traders were used to these false breakouts, but we had our first green day, we had the inside bar, and then the breakout of that range, of the opening range on the day itself, becomes our first entry on the longer time frame, 15-minute. Obviously, on the smaller time frame, traders had the opportunity to enter this market according to best trade setup rules out of the playbook. So going down to the smaller time frame, you can see clearly this was a very clean setup for a very first day of the trading week for the most part, because yesterday being a holiday, Monday, New Year's Day. But we can see, again, the dump down. Day 3 breakout traders in the market, our first green day, our inside bar, and then the parabolic explosive vertical move coming out of the opening range break. And this is a great one. The British pound was fantastic. And we had an inside bar the previous Friday heading into Christmas. So again, a couple of traders have asked me again, they're not sure what I mean by an inside bar. It's a bar that's high and low or inside of the previous day's range. We had a breakout that at that point had not failed because it closed below the original breakout. So we have our day 1, day 2, the inside bar, but they broke the high of the inside bar on Monday, which we talked about. The 3 pushes to the high for the sell at the London Open. High of day. High of day is broken. They've triggered the high of the inside bar. This is right out of the playbook. The high of day, low of day trade for the inside bar. And then we had a short squeeze in the Europe-London window that broke structure, and then the vertical move in the U.S. session. We had an inside bar on the Thursday. So heading into Christmas, we had an inside bar on the Thursday. Breakout traders were triggered at the high of day in the U.S. session, and then that market came back down and closed back up to the upside. So although inside bar traders were triggered, they tapped the low ever so lightly. That becomes an outside bar on the day, and heading into the new year, we have an outside bar. So the outside bar that gave a high of day short trade, and then we have our inside bar. And this is a pattern that Al Brooks calls the IOI pattern. And this is a potential major reversal, the IOI. Inside, outside, inside. And again, coming back to what one particular trader pointed out, this was first red day, and indeed it was. So we had the pump up Remember the criteria from the playbook. We had our pump up at the close of the Friday session, then the inside bar, and then a clearly defined high and low consolidation in the Asian session. That's our opening range now. And sure enough, lo and behold, that market breaks down and into our London Open right at the end of the first hour, gives a parabolic trade out of our inside bar all the way down through, if we go to our 1 hour chart, to the low of not only the month now, but as I talked about in our previous video, there is a fairly large space. I have no idea what this market will do, but on the day itself, there was plenty of room for this market to drop. We had breakout traders still in the market from back in November, but we also have a low of the month just from the November low. They've tapped that. They've gone straight down to that before pulling back. So not sure what this market will do, but we obviously had room to the downside on the British pound. Now, I want to reiterate to traders that are stuck in the this looks good in hindsight mentality to understand that this is a trigger. This is the trigger. So it's not hindsight. This is giving us a thesis on the day. When we come to the screen, the inside day, what happened? It's a pump up. It's an inside day. We get our opening range. They break out and fail and then pump it up. We'll zoom in on our smaller time frame. They pump it up into the high of the day for the engulfment and short trade down on our day 2, our Tuesday, which is basically the first trading day now of the new month and new year, since yesterday was a holiday. But the inside day is a trigger day, narrow range and inside day. We saw a very similar setup on the euro. We had a trading range that the euro had been trading in. We traded down on Monday, Tuesday. There's our opening range and initial balance. Day 1, day 2, day 3. Day 3, after our initial balance, gave a reverse head and shoulders at the low of the week on day 3. Initial balance, Monday, Tuesday, sets the high and low for the week. We've talked about that. There's our high and low. Reverse head and shoulders on day 3 at the low of the week for a move back to the high of the week. Then the market auctioned down first green day, low of day buying opportunity in the Europe-London window, and the continuation in the U.S. session. That breakout failed. Then we had our first red day. The breakout failed, and then we have a signal day. First red day, and that signal day gives us a thesis on the day. We have a neckline for potential trap volume. We can move that right up to the inside bar, because if the inside bar now fails, we have a death line for trap volume 3 days above that neckline. We have our opening range for the new day. Asia sets a high and a low. They trade back up into that high at the Europe-London gap, the Asian-London gap, before breaking down and collapsing through the low of the inside bar and the low of the week. So oil, West Texas, we had our false break reversal on Thursday, which gave us our low of the week that started our day count. It's a doji day. And the doji day is very similar, and what matters is what happens after that day closes. The market, again, gave us an opening range in Asia that auctioned higher. It made higher highs. That's our break in structure on the inside. The higher high is our break in structure to begin a dump and pump. So we have first green day. We have a high and a low range. The range is extended in London. So Asia makes a high and a low. They extend the range on the upside. They extend the range on the downside. There's our high and low for the day. They auction back down into the low. We have our low bear, low bull, pin hammer engulfment, and you'll notice if we bring this across, our low bear on the original breakout. So coming back to the market, put a low in place. It makes a lower high. They break out of that lower high. They break out of the lower high, make a lower high again, and engulf. That is our new breakout now. That's our new breakout into the new day. breaks out, pulls back, and continues to go higher before breaking down. That is our new high of the day, and this is our low of the day. They trade down into the low of the day in our London window. That's the low of the US session, so I've talked about 3 session setups. This is day 1. Day 2, we measure down for a potential strike zone. We get a short squeeze, parabolic setup for the long trade in the US session. 1 push, 2 push, 3 pushes, and on the smaller time frame we had a parabolic setup. As soon as it went to the low of the day in reverse, that was a long entry. So we have day 1. Day 2, our opening range, high and low. The market sets a high and a low. That's our opening range now for the week. They break out of the opening range in London and fail for a high of the day London sell trade back through the low of the day. Now, this trade that I took in the US session, a trader asked me what the thesis was. The market's already broken out and failed. So the question on day 3, it's failed. They broke out and failed. If that trade is going to fail, where is the money? Day 3, high of week, broken down market. My thesis was, first stop was to get the longs from Friday, because I have no illusions that they will come down and collapse and then come right back up and get the shorts that are down low at the New York Open. My thesis on that trade was 3 pushes to the high. So we come back, we'll put this, we have a high of a lower high. Then they've come up 1 push, 2 pushes, and then a 3rd push, and the engulfment short was a vertical collapse for 75 pips. Now, obviously, when New York opened, they came right back up into that short trade before breaking down. And as I mentioned to another trader, high of day, low of day. They're going through the low of the day. Why? Because they've already got breakout traders in the market. They've got longs triggered on other time frames. Their stops are down low at the previous day's low of day. No inside bar on this pair, but again, just a 3-day setup. Low of week, high of week, broken down market. This is the low-hanging fruit trade. And again, the low-hanging fruit trade that we talk about in the playbook is the trend continuation trade. So you'll notice the low of this candle is 78.77. This is 100 pips from high to low within a couple of pips. This is 3 levels of rise for the short trade back through the low of the day into breakout longs from Friday's US session. Now, gold was slightly different, but I mentioned last week that if they broke the high of day on Tuesday, that would be a break of structure on the inside, and this is a classic dump and pump setup, which they did. We had first green day on our Wednesday, so Monday sets the opening range, high-low for the week. There's our opening range. So just think high-low, think boxes. They broke out and failed and reversed on day 2. There's our initial balance. That's the high-low for the week. Again, remember, we're looking at what happened yesterday because it tells us what potentially the setup may be today. We have lower highs. The market breaks the high, pulls back, and breaks out again in the London session. That higher high now, as you heard me just say, is a dump and pump. That's the break in structure for the dump and pump setup back in the long direction. That closed as our first green day on Wednesday. First green day. Now, first green day trade is a low of the day buy opportunity if it presents. We had a few setups last week where we had a buy low of the day opportunity on gold first green day, and the S&P gave a sell high of the session opportunity because they went up and did a mirror image and broke out and reversed in the short direction. So we have a narrow range continuation day, and I talked about this in the playbook. First green day, if the first green day does not go, look for the second day trade. Now we had our narrow range day on the other pairs. Gold did not trade on the 2nd of January on the Monday. It did not trade at all, but we had a narrow range, higher high, higher low on our Friday, and you'll notice that this market higher, 3 higher highs, and it closed outside of the breakout. We have day 1 breakouts. So we've talked about the 3-day breakout, day 1 breakouts. Day 2 breakout longs, the market closes as a breakout day. And we'll just move this box over. We have day 2 breakout longs. And right off the bat, we have our high and low established in the opening range of Asia on a breakout, a day 3 breakout. Day 3, level 3, tends to blow off in the direction of the trend. Our high-low range gave a breakout trade in Asia. Europe extends the range. So there's our high and low. They go a little bit higher. Europe breaks out and extends the range. So now we have a breakout that fails lower low, lower high. So again, I'm not talking about, I know some traders shorted this in London. I'm talking about the general structure coming to the screen in the US session. Lower low, lower high. That's a broken market, broken down market. So as one trader asked an excellent question, I thought you wouldn't counter trend a day 1 breakout trade. This is not a day 1 runner. We've already taken out the high of the week, right? We've taken out the high of the week. This is now day 1, day 2, day 3, day 4 with the holiday inside. This double day is a split double distribution setup. We're at the high of the week and the market has broken structure on the inside. This now becomes a larger dump and pump. Now I looked for the short trade inside of that lower high after the failed breakout. I thought this peak formation may hold. I was quick to scalp out of that trade when I saw that double-sided auctioning at the swing low in the U.S. session. But this breakdown in structure becomes the larger pump and dump. And you'll notice this high, the London high, this high is at 20, 19.6, we'll call it 20. They go up 3 levels of rise into the high of day to 98. That's 75 pips. Above the high of day, 3 levels of rise into the high of day, for a collapse back down through the low of the London session. Now, my thesis was right. I was just a bit early today, probably not as sharp as I could have been today, but that's okay. You take the trade and you manage it and execute, and you recognize when it's not behaving as it should, cut the trade, get out, reassess, and move on to the next trade. So we see this market break down, not a first red day or anything just yet, still a breakout trade, but obviously it established, again, a high and a low, opening range. It extended that range. We're still on the front side of the move. It breaks down, gives a lower high, lower low, break in structure on the inside, the pump up, which becomes on a bigger scale, 3 pushes into the high. This ended 15 minutes into the New York Open for the vertical collapse. Don't know how this will end up. Not a first red day. We could end up seeing that. Who knows? Tomorrow, this market may put in a low on our initial balance and resume the upward drive. No idea. Point we're talking about, though, is the importance around holidays, the inside bar, narrow range days, and understanding the explosive opportunity when that coincides with a 3-day setup. So go back and review your charts. Again, thanks for a ton of great feedback. We'll be adding some more detailed case studies into the resource folder inside the Best Playbooks course. Again, ton of great feedback and working through all the questions. I'm trying to compile that into a PDF with answers and questions and probably some attaching video too. So excellent start to the year, traders. Again, focus on the bigger, better setups. There's going to be plenty of great opportunities, traders. Focus on identifying the trigger days, first green day, first red day, the inside days, day 3 breakouts. They are all powerful 3-day setups. And when they coincide with the bigger picture, you're going to get explosive parabolic moves. Have a great week, traders. We're going to have a fantastic start to the new year this week. We already have excellent results from traders. Focus on 1% better every single day. Happy New Year, and may the markets go with you.